Ramadan Kareem and Konnichiwa. In this week's edition, we'll talk about corporate news and Dana Gas's first half 09 result. Markets have closed generally weaker in the UAE this week as oil prices have softened, international markets have been lower and traders have exited positions heading into the Ramadan period. The Economist Intelligence Unit has forecast that around $50 billion will be spent on energy-related projects around the GCC region between now and 2015. They have also predicted that economic growth in the GCC region will continue to outperform all the other regions in the world over this period. New energy capacity is driven by demand from a young and rising population, and also the development and modernisation of services, property, infrastructure, health and related services around the GCC region. This highlights the long-run growth story of the GCC region versus more ageing and oil-consuming rather than oil-producing nations in Europe and the United States. From an investment point of view, the best leverage to gain access to this energy thematic is investing in Arab tech on the DFM, which is increasingly targeting oil, gas, construction activity. Dana Gas, listed on the Abu Dhabi Stock Exchange, which has around 3.0 trillion cubic feet of gas reserves, and also TAQA, listed on the ADX, which is an energy monopoly in Abu Dhabi. Ratings agency Standard & Poor's has yesterday downgraded its credit outlook on Tabreed, listed on the Ratings agency Standard & Poor's has downgraded the credit rating of Tabreed, listed on the DFM, to BB- from BB. We continue to rate Tabreed an underweight as it has concerns over its profitability and cash flow generation over the coming 12 months. Tabreed aims to add 16 new district cooling plants in 2009, however has pared back 25% of its capital expenditure plans for 2010 in light of the slowing property market. Although the company has a strong net tangible asset per share, we continue to see better value in stocks in other sectors around the UAE. Air Arabia's 300-room hotel, located at its Sharjah airport base, is on track to be complete in April 2010. We expect that the hotel will complement the airline's budget travel offering and contribute to earnings from second half of 2010 and into 2011. There has been continued strong evidence that air travellers are choosing to fly budget airlines and fly economy over business and first class, and we expect that volumes of passengers in the Sharjah airport, where Air Arabia is based, will continue to grow strongly during the second half. During the first half, the airport managed 2.23 million passengers, which was up 10% year on year. Sharjah is ranked third out of the 25 world's fastest growing airports last year. We maintain our overweight recommendation and price target of 1 dirham and 33 fils on Air Arabia. Central bank figures in the UAE dictate that aggregate banking growth in loans increased by 1.5% to 1.0 trillion dirhams during the first half, versus deposit growth of 4% to 961 billion dirhams during the first half. Therefore, loans still outweigh deposits, highlighting the inherent risks within UAE bankings. Provisions made by the 7 of the major UAE banks total 12.6 billion dirhams to date, representing only 1.3% of gross loans. Therefore, we expect that there is further downside to provisions and banking profitability during the second half of 2009, and we still remain very defensive on our banking allegations, preferring First Gulf Bank and National Bank of Abu Dhabi to some of the other more risky banks. Property services company Deepa, listed on the Nasdaq Dubai, has won the 200 million dirham contract to provide fit-out services for the new Ferrari theme park in Abu Dhabi. This highlights the fundamental strength in Deepa, even in these tough operating conditions, with new contract growth and earnings growth expected during 2009. Also in the property industry, Jones Lang LaSalle has provided guidance that property prices declined by 6% quarter on quarter between Q1 and Q2 this year in Dubai. This is consistent with evidence from other property companies suggesting that the rate of decline in property prices in Dubai has slowed, and therefore the industry is looking more stable heading into the second half of 2009. Dana Gas currently has 3.7 trillion cubic feet worth of gas around the Gulf region and continues to make new discoveries in the Nile Delta Basin in Egypt, as well as ramping up production in Egypt and Kurdistan region of Iraq. The company trades on a forward FY10 EPS. Dana Gas currently has 3.7 trillion cubic feet worth of gas around the Gulf region and continues to make new discoveries in the Nile Delta Basin in Egypt, as well as ramping up production in Egypt and Kurdistan region of Iraq. Dana Gas trades on a forward full year 10 price to earnings ratio of 9 times, and given the higher rates of production out of Egypt and Kurdistan, ongoing new discoveries, likely upside in natural gas prices, and the corporate potential associated with the Nabucco pipeline, we see further upside in the share price of Dana Gas towards 1 dirham and 40 fils over a 6-month basis. So we remain overweight on Dana Gas and believe that it offers investors strong exposure to the energy and oil and gas thematics here in the UAE, where it's difficult to get exposure to this space. That's all for the corporate news this week. Happy investing, dom arigato, and sayonara!